Welcome back to Trade and Wait. We're going to review price action on the S&P 500 E-mini futures chart, utilizing ICT concepts. And I erased the whole chart. I didn't post a video yesterday. I didn't do my book of charts yesterday, so I'm going to do that today. Do both of yesterday and today in this one video. So I cleared the chart, so I have to pretty much start over, right? Pretty much treat it like a new. So this is previous week. Technically, we are trading inside the previous week's range. So let's highlight that, right? Meaning discount to premium, and now we are trading below equilibrium, below the halfway point of the previous week. So we have an order block here, order block 10 price higher. We have a propulsion block here, right? It's a series of down close candles trading into a order block, so propulsion block, and throw that out there. So besides the order block, we have this bullish fair value gap. Don't really need to highlight it, but then you just shoot that across, right? It's significant because price utilized that consequent encroachment and traded higher, right? So you had an order block and you had a fair value gap, consequent encroachment, the halfway point of the fair value gap, then price higher. So when price comes back to that level, we want to see, and the point of fair value gaps and stuff like this is true support and resistance. Technically, you can utilize any method you want as long as you're consistent and reliable on that method, but you want to be, obviously you want to be able to identify edge in your trading and be able to duplicate that edge time and time again whenever possible. Anyway, we are in a discount currently. I'm gonna shoot that across there and turn this off. All right, so here we have buy side being rated here. Buy side, we have a break in structure here, market structure shift here, and you got one here as well. So so that would be a setup here off of this inverted fair value gap, and draw that out because this should have been the bullish fair value gap, the whole price higher. You see a little tease here, and then the drop, right? Retracement back into this inverted fair value gap. And the definition of an inverted fair value gap is obviously, in this case, is a bullish fair value gap, that was violated because it should have held price higher. It's an inverted fair value gap, and one thing that inverted fair value gaps signify is a change in the state of delivery. So it's twofold, right? You can either look for a market structure shift and or a change in the state of delivery. This is why you would get into this trade here, or this kind of take the short from here, but then it retraces right back into it. So sometimes it doesn't do that, right? So you have a small fair value gap here, but we don't need it, right? So it's twofold, right? Changing the state of delivery or a market structure shift. In this case, we technically have both, and then the retracement into this level. You can say, oh, discount the premium as well, and this would be a smaller range, right? At the time that this candle was created, This would be the high. Apologies. This would be the open of this down close candle. So technically this would have been seen as a swing low or a pivot low, this up close candle at the time. So let's see. And this would be swing low. And swing low on a lower time frame. You'll see, like, let's see here, 15 minutes. 15 more minutes. This is where we anchored it to. That's that, right? You see on the lower time frame, this is a swing low. Still a swing low. Retrace into the imbalance, and then this is a fair value gap inside of the inverted fair value gap, and then that's your short. And that's yesterday. How about that? Worked itself out. But let's go back to the 4 hour, because that wasn't all we wanted to extract from here. All right. Let's see what other jewels we have here. That's low-key sufficient, isn't it? And I know I was discussing this with some trading buddies of mine. What was this, Wednesday maybe? No, actually, I think that was like last week or something. I was when did I discuss this with someone? Well, BMO, sorry bro, I don't remember. Matter of fact, we were texting back and forth. I don't know what day that was. All I know is I'm still under the weather. I'm getting better. Alhamdulillah. But anyway, let's continue, because that's an insignificant point. So we utilized this fair value gap, but this fair value gap here was significant here, and you could utilize that here once it was violated here. Let's just draw it out. I'm gonna probably delete it because part is getting kind of crowded, and that's what I mean. Like, it's been violated here, right? This displacement, just like it's not even there. It's like get out of here, right? And then we have this breaking structure here. You see price at the break, retest, drop back into this order block, and back into this order block. And what's the level on that order block would be? Matter of fact, let's not waste time. The opening price here would be 58.50.25, and the low of this candle is 58.50. So it's one tick lower. So we are at the bottom quadrant of this fair value gap, bullish fair value gap. We did trade down into a discount, and looks like Monday created the high of the week, and potentially, you know, Monday created the low of the week last week. So let's see. All right, so we want to see if these levels, this bullish fair value gap, this propulsion block, if it holds. One thing for me, I'm looking at these wicks, like sweeping liquidity here, and you want to see if it holds. But right now, these up close candles are holding price lower. So we did sweep liquidity. We did run sell side here, ran sell side here as well, and we have a small break in market structure. It's not as significant to me because there's no gap here, but we do have a break in market structure to the upside here, right? But we have to trade what we see. Doesn't hold much weight. Technically, we traded, right? So you had the run on stops, pull back in the direction of the current order flow into this bullish fair value gap. That's worth more significance than that level. And there you go, retracement here on Thursday, 2 o'clock, and then here. But these wicks down here sweeping these levels, you gotta know when to hold them. You gotta know when to hold them, when to run. Did we finish? This is a low, this is a high, low, higher, high. So you can look at this as a breaker as well. This previous low that was ran. So there that go, and I'm gonna drop down. And one thing I noticed yesterday is that the NQ, one of those, the NQ ran that high, right? Yesterday's, yeah, ran the Asia high of the previous day, and then it dropped. So here you have a failure to go higher. So we have a divergence. If you didn't see the divergence, then like it doesn't matter, right? No, right? You just want to have as many things in your, you want to build as much conviction in your trade ideal as possible, so it's significant. But if that's not your routine, and obviously trade the best way that, you know, the way that you're most comfortable, you know. Anyway, so run on stops is your run on stops here, please out. And I just want to focus on these 2 days and not keep going too far back. But I like this buy model here. So this sell model, I think I mentioned on the previous video that this I think price went here. This is Wednesday, yeah. Here, and then I think, I don't remember when. But anyway, I said that price needed to trade below here for this market maker sell model to be completed. It needed to trade below here. And that's what it did, right? All right, so I want to focus on a few things, and particularly optimal trade entry, longs and shorts, as they are key in market maker buy and sell models. So literally this is the previous day's range. These marks are the midnight to midnight, and this would be the previous day's high, previous day's low. And but one thing, I don't want to be too extra. Let's see, don't have to be that extra, but took off electronically traded hours, then it kind of makes some degree of sense, right? Previous day's high, previous day's low, then that retracement there. But we don't have to be kind of like, that's kind of grimy, right? Like, how can I rely on that, right? So let's pull this down to the intraday low, right? So that would be the range that price is opening up to here, right? So you got the high, we got the low, this low, 6:15 on May 21st, Wednesday. And then we have a retracement, right? What time of the day is this entry? So let's go here. Let's see what we can do. 15-minute chart. So here we have 7:45 and a retracement at 9:15. So let's delete this, and because this is technically the first trade of the day, it would be 9:15, 9:30, right, into this order block. Right, it's like it was supposed to run this because NQ ran it, right, but it didn't. So there's your divergence to that it's not going to continue higher. Anyway, here's your order block. I'm not going to change colors anymore. I want to wrap this up, right? Here's your order block. Here's your breaking structure, market structure shift. Here's your retracement into the order block. Into this, you can use this inverted fair value gap if you wanted to. But here's your order block. Here's your push higher. Here's your breaking market structure. Right? And here to here would be your entry for your this is a 15-minute chart. We went from the 4-hour to the 15-minute chart. So, and you targeted the intraday high, 10 o'clock. This would have been the next target again, but we have this inverted 4-hour fair value gap, and price stayed below the consequent encroachment of that level, ran these relative equal highs here, and then let out. So this is your first setup. Optimal trade entry long here, while keeping a higher time frame PD arrays, potential draw on liquidity and focus, right? So here's your entry, 78.6. Here's your I can actually right, here's your first profit here. Here's your first target, and yes, second target. Target 2 is hit, and then it dropped. So all right, so that's one setup. Matter of fact, what I wanted to do was say, hey, what time of the day was this? This is 9:15, 9:30. Sorry about that. All right, so that would be your first entry here, just before market open. Market open here, kind of dip right back down. So you have open, low, high, then close, right? So if you missed that, technically that would have been your exit here. This would have been your first target. You have a balanced price range here, and price dips down into this order block and this bullish fair value gap. Targeted the intraday high, the 10 o'clock high, and again traded into this 4-hour fair value gap. So question would be, if you entered here in the order block, you have a small amount of drawdown. I wanted to map out the time. So this is 10:45 for this entry, and the exit technically would have been at 12:45. So that's 2 hours to do all of this. Am I tweaking? No. So anyway, you could have got out and all this chop. This would have been, you kind of think, oh, it's holding a level, or is that, you know, kind of expecting it to break higher. You probably would have like taken a loss after it dropped like this so drastically. All right, so boom, that's one entry. And again, we had that using the range. This is the most significant drop down, so we use that on this time frame. We use this here to here approximately, and here's your entry again off of the consequent encroachment, also divergence with the NQ, optimal trade entry short, and it actually didn't complete until today, Friday, below 1 standard deviation. It's now here. All right, so that's that. What time is this? 12:45, and you could have got out right before the PM session started. PM session continuation, ever so right inside of this 4-hour bullish fair value gap. You have a small fair value gap here. And that high of the low of the fair value gap, or the high of this candle is 58.75.75, and the high 58.76. So that would have been an entry into this fair value gap. And then short. So you say it didn't take out the swing low, but then it just kind of consolidated. It didn't trade back. In fact, it did, right? Traded back into it during the London session, consolidated some more. High impact news today, unemployment claims at 8:30. You had flash PMI at 9:45, and you had medium or moderate news at existing home sales at 10. So this would have been another entry. Then pull back into that again, and then it ran all this relative equal highs and then dropped. So all right, so that's an entry. And here's your long entry here. So you have a break in market structure here, retrace into this bearish fair value gap. That's what it was, right? Into this bearish fair value gap. So you have a run on stops. Previous day's low. Previous day's low. And then you had that displacement, this displacement lower. And you have a strong drive higher. And then a retracement back into, now this is an inverted fair value gap. As it should have held price lower, right? And you see price respecting, the body's respecting consequent encroachment, and the wicks doing the damage. So the wicks traded lower into this fair value gap. And something you have to accept, you could have chose lower if you like. That's also an optimal trade entry, long. And in general, I don't use these long wicks, but I'm gonna leave it. Here's your entry between these two levels, which is like 70.5. That's good. You didn't want to go that far down. At 61.8, 62% is right here. That's a good entry. If you didn't want to use this long wick and you pulled it down, let's see how effective that would be. So still at 61.8, and then price kind of went to almost went to target 2, but -5, -50 is here. That's it. That's a target, right? So you say, oh, that's the fib level, but we have this higher time frame, 4-hour bearish fair value gap here. Let's send price back down. And the time of the day is that 3:15 and 3:45, that macro, which is also it's a market maker. So that hour also has a silver bullet, right? Also has to me has a market maker buy and sell model potentially there. And you have it here. This is it. 1, 2, 3 drives pattern into the 4-hour fair value gap. So this would be a smart money reversal, and then this would be your distribution, and your retracement and your second distribution, right? But anyway, I just want to focus on this move here. Let's go. Oh, it won't show on the 5 very clearly. 1, 2, 3, then drop. So it's actually there. And this would be your entry here for the sell model I spoke of. Right, that would be your 5-minute fair value gap after this break-in structure. And all of this retracement. Let's see. Optimal trade entry, not quite. Went above 50%. And this is that's good money still based on this model. And you have a breaker here as well. So that's even more reason to consider the short position from here. Right? And this would be the target. Just make it big, right? Just take this one off now. And let's just go to 1 minute, because that's where, for me, that's where, yeah, this becomes really clear, right? And this becomes a nice little sell model. Around these highs, then you violated bullish fair value gap. Bearish fair value gap, and you have a small retracement into here. So this high here would be 58.90, and the entry here would be 58.90. So it's a balanced price range. So this is institutional order flow entry drill, IOFED. This would be an entry at 1534 or 334. And then distribution, retracement into this 5-minute breaker, or this 1 minute fair value gap, bearish fair value gap, drop. Or you could use this small one here too, drop. And again, the target was this low. All of this wouldn't have mattered much, but that would be your sell model there. Hour, as they say, but it's really the 1515 to 1535, 1545 macro, and then the 1545 to, I'm gonna say 1545 to 1615. But we already know the last 10 minutes and the first 10 minutes is a macro as well, so you can just isolate it to 1550, 1550, and 1610. Right, so that would be your right here. So you have that nice retracement here at 1550. Then it continues on the macro, dropping down and finishing just before 4 o'clock. Time and price. Anyway, thank you for listening. Look forward to making more videos and reviewing these charts and documenting specific setups. Please like, comment, subscribe. Peace.